morning and welcome to this edition of IG Live. It's Thursday, 25th of May. Let's take a look at the headlines as we see some breaking news coming through that Germany has now officially entered recession. We're focusing on not the euro, on the euro-dollar trade, but the dollar as it continues to strengthen with just 1 week left to the debt ceiling resolution. Nvidia jumping to a new all-time high, boosting rival chip makers. We've got artificial intelligence, the biggest mover there for the chip maker, and HSBC's focus on Asia, considering exiting a dozen countries. Take a look at volatility on the way down in today's session. It doesn't mean that we're going to get some really big gains or anything in terms of risk assets. And in fact, on the contrary, when looking at these numbers, to be honest with you, we are possibly seeing a little bit of weakness again in the European markets. FTSE 100 yesterday, relatively strong losses. And the broad message is that we're holding on to these at 76.21. And unless we see some breakthrough from the discussions, the political discussions around the US debt ceiling, this is unlikely to change anytime in the near future. We've seen some negative reports coming through from Fitch on the US economy. This is seen across the European markets. German DAX, same sort of price action as London. We're sort of building on yesterday's low point on the 24-hour markets. French CAC 40 yesterday at its worst point or low point yesterday was at levels not seen since the 30th of March. So all the gains that we've seen in April and May now wiped out in the French markets. Overnight in Asia, pretty much every single market on the way down, apart from the Nikkei 225. Rise of 0.4% on the session today. Hang Seng Stock Index down relatively heavily. S&P ASX 200 also on the way down. But the US, this is where things get interesting. The ratings agency Fitch has put the United States AAA credit ranking on watch for a possible downgrade as the country's debt ceiling talks go down to the wire. Traders are waiting for an indication that legislators are making progress so that they can raise the amount that the Treasury can borrow before it runs out of money, which could happen as soon as next week. And that, of course, would do some interesting things to the market for sure. Let's take a look at what's happening with the Dow. That drop of 0.75%. This rising line of support from the lows that we had back on the middle of October last year. You can see there's been a touch back on the 20th of March. And indeed, this is where we are again. But significantly as well, down yesterday below the 200-day moving average. But the last time we saw that was the 9th of March. But we've got a little bit of money going into the markets at the moment on the Dow. Insofar as some of the other areas of the markets are concerned, not too far away still from recent highs on the Nasdaq at 13,138.06. It was a session of gains when all was said and done yesterday on the Nasdaq on the 24-hour markets. The moves that we saw came late in yesterday's session with some of the really big chip makers making some big moves. A 23.9% upside for Nvidia last night in extended trade on the IG platform, supporting this gain on the Nasdaq late into the session yesterday. I'll cover that in just a few moments' time. Now, the minutes of the last Federal Reserve meeting were out late yesterday. It showed that those that were in the meeting they were divided over where to go with interest rates, with some members seeing the need for more increases, while others expected a slowdown in growth, remove the need to tighten further. Though the decision to increase the Fed's benchmark rate by 0.25 percentage point was unanimous, the meeting summary released last night reflected disagreement over what the next move should be, with a tilt towards a less aggressive policy. Now, when we saw the data released yesterday, we did see a little bit of uplift on the dollar. This is the dollar basket. And indeed, you can see rising again today. The Federal Open Market Committee voted to remove key phrase from its post-meeting statement that indicated additional policy firming may be appropriate. The Fed appears now to be moving towards a more data-dependent approach in which a number of factors will determine if the rate rising cycle continues. Now, of course, the way to trade this is for the euro-dollar trade. And you can see now we are at this line of support on this fib here at 107.39. In fact, we have in today's session dipped below that. And I think if we look at what's happening on the 30-minute candles, there we have, that was the point at which we've seen the German economy go into recession. Technically speaking, we'll cover this in a little bit more detail in just a moment's time. 30-minute candles, we've got a little bit of a gain at 107.38 at the moment. So a little bit of recovery on from the losses that we saw just half an hour ago on that news about the German economy. But the long-term picture is, and of course the big question is, will we get a support of this line at 61.8% retracement from the lows we had back on the FIB on the 15th of March and the swing high, which was hit a couple of times at the 111 level between the 26th of March and the first week of May. So this pullback that we've seen is at a critical level. If you get a candle close below the 107.39, the next line of support is the 76.4% down at 106.54, and you'd be short on that with a stop just above recent price action if you see a continuation of that move. Let's look at what's happening in terms of one other market. Of course, when looking at what's happening with the US dollar, it's always important to see what's going on with the price of gold. I want to show you the gold price yesterday on the way down, and indeed in today's session we are lower again today, not too far away from recent lows and not too far away from levels not seen since the middle of March. That 61.8% retracement is at 1910. We're currently trading at 1958. So if you're short on this, as indeed would have been the case in the last few weeks or so, stop goes above recent price action. Also watching what's happening with the US dollar could move this afternoon. We've got some key economic data out in the US on GDP. Let me just quickly run through what we're looking for there. This is the second estimate of US GDP for the first quarter. The market expects the US economy to have expanded 1.1% in the first 3 months of the year. Also at 1:30 p.m, initial jobless claims, the market expecting 245,000 new claimants last week. Let's return to that German story, the breaking news we had half an hour ago. Technically, the German economy has gone into recession. First quarter has been revised down. I think we've got some data for you to look at. We've got the GfK consumer confidence as well, rising to a negative 24.2 for the month June after a negative 25.8 in the previous month. The consensus had been for a negative 24. But this is the data I think that's worth looking at. With the quarter on quarter for the first quarter down, a contraction of a negative 0.3%. This follows a decline of 0.5% in the fourth quarter of 2022. So Germany technically in recession, as we've seen some negative swings for the euro. Let me just quickly go back to these foreign exchange markets and just catch up with a couple more charts. This is sterling against the US dollar. The stronger US dollar is forcing sterling now down to levels there not seen since the 31st of March. And you'll have seen, as we highlighted earlier, this rise in the Nikkei. The Nikkei responds to weakness in the Japanese yen, and we're getting that in spades at the moment. 139.53 is where we're trading, with the US dollar rising again against that Japanese yen. The yen now at its weakest point that we've seen in the market since the 28th of November, which is a good reason, I think, in some respects, to buy into the Nikkei because it's so full of exporters. It benefits from a weaker local currency, which is what we're getting there. Quick look at what's happening in terms of some of the corporate news headlines. HSBC was up down 1.3% in Hong Kong today. It could be exiting as many as a dozen countries. In a Reuters interview, the newly appointed Chief Financial Officer, Georges Elhedery, said HSBC's plan is to focus on its Asian expansion. He said some of these will have slower progress than others, and none of them is material enough on its own to change the profile of the overall business. But as we progress through and execute on these assessments, we do expect them to contribute towards that shift to Asia. In other words, there is this expectation that we could well see HSBC close or certainly exit some of its European businesses particularly. Elhedery declined to reveal which markets were under review, but what we do know is that the bank's European operations recorded a net loss in 2022. In the last 2 years, the bank's already triggered planned sales of all or parts of its business in France and Greece, but also in Russia and Canada. Latin America could also be targeted, according to this report in Reuters. Last year, the region only contributed 5% of the group's overall profit. I want to show you what's happening with HSBC. Now, this is the London-listed stock. As I said, it was down 1.3% in Hong Kong. Big declines yesterday of over 3%. Now, you remember a few weeks ago, Ping An Insurance, which owned about 8% of HSBC, wanted the bank to separate its Asian and Western activities. Ping An wanted to prioritize growth in Asia, where HSBC generates 78% of its local total profit. It didn't get support from other shareholders, though, on that suggestion. HSBC will open 598 0.6 when trade gets underway at the top of the hour. Staying on the charts, let me just wind in a chart of Tate & Lyle, the former sugar company, which is now a food additives business. Revenue up 18%, adjusted EBITDA up 22%, adjusted profit before tax up 13%. The company is recommending an increase in the final dividend of 2.5% to 13.1 pence per share. All good news. Yesterday we saw a drop in the stock for the second day in a row. 784 is where that stock will open. If you are long on this, your stop goes below the around about the 775 level, with a view to taking this higher if you think Tate & Lyle is ready for a little bit of a bounce today. It's being held up by this blue line here, which is where it closed yesterday at 784, which is the 100-period moving average. Staying on the charts again, and just take a look at what's happening with pets at home. Down overall in the last week or so. It's had a record 2023 according to the full year numbers out this morning. Total group revenue 6.6% up to just over 1.4 billion. Like-for-like revenue up 7.9%. The vet group revenue increasing by 13.3%. This is a really big part of it. The pharmaceuticals business, the pets at home, revenue up 13.4%. Like-for-like. Retail revenue growth 5.9%. Like-for-like up 7.5%. Full year dividend up 8.5% to 12.8 pence. These are really good numbers out from pets at home. You see, recently we've been we've been pushed down by this line of resistance at 395.6. We will open at 368.4. If you're long on this, your stop goes below the 100-period moving average around about the 358 level, with a view to taking that higher. If you think like me, these numbers look pretty good. It's a question of whether or not built into the price at 368.4, we've already got this idea that the company is doing well. Well off the highs. The COVID highs took us all the way up to this level at 525. So we're substantially below the pets at home record high that we saw back in September 2021. That's pets at home, a stock to watch at the start of today's trade. It's been a massive beat for the gaming chip company Nvidia in its first quarter, accompanied by a stronger than expected forecast as well, seeing a big rise in its stock as of the close last night. It reported adjusted EPS of $1.09 versus 92 cents expected on revenues of 7.19 billion, far higher than the 6.5 billion expected. But it's really all about artificial intelligence. AI investments will keep Nvidia ahead of its semiconductor rivals, according to the company. Nvidia said it expected around about $11 billion plus or minus 2% in the current quarter, far surpassing initial forecasts of $1 per share on 7.15 billion in sales. So everything looks very impressive. And indeed, if you look at what's been happening with the stock, absolute massive upside yesterday in shares. Nvidia stock has had more than already doubled in the year. You can see 126% up from this vertical dotted line, which is where we started out the year, all the way down at that point where we were at $140. The high point there, 319. Yesterday closing out at $380.65. If we take that all the way up there, 180% now we've seen from the lows at the beginning of the year to the very high point we saw yesterday. This is an absolutely amazing transformation. Nvidia stock with this rise, mostly driven by optimism stemming from the company's leading position in the market for AI chips. It says it's seeing surging demand for its data center products, which reported 4.28 billion in sales versus expectations of 3.9 billion, a 14% annual increase. And Nvidia's strong performance in data centers shows that AI chips are becoming increasingly important for cloud providers and other companies that run large amounts of servers. Just a quick tour around some of the other stocks worth watching. AMD, yesterday, all sessions on the IG platform likewise saw a relatively strong day yesterday. It's up 8.44%, and indeed closing at levels there not seen since the 31st of March 2022. Palantir Technologies also heavily involved in developing AI, rising nearly 4%. So gains across the board on from Nvidia's news out late last night on first quarter earnings and the forecast. So let's move on and take a look at some other areas of the market. Now, although it's past its peak, inflation remains well above the Fed's target and interest rates are expected to stay high for some time to come. in this context, demand for discretionary products through retailers is coming under a lot of pressure. Best Buy feeling the heat. It's set to report earnings today. The street expects first quarter revenue to fall by 10.5% year on year to $3.54 billion. Adjusted EPS forecast at $1.11, down some 30%. Best Buy is one of these stocks that trades all sessions on the IG platform, and it trades under the ticker BBY. Yesterday it closed down at 68.47. Since reaching a 52-week high in early February, Best Buy shares dropped around about 21%. Another stock suffering from rising costs is Gap. Let me just show you what's going on with the Gap share price and what we're expecting there. First quarter earnings, loss per share of a negative 15 cents, revenues of 3.29 billion. This is not an all session stock, but if you look at the Gap share price, you can see here that we've got this move down below recent support at 779. The Gap will open today at 761.5. Over the past 12 months, Gap shares dropping 14%. Cutting costs put in place over the period. 500 executives fired last September. Hiring freezes right the way throughout the company in 2022. It seemed to have supported the stock to a degree, up 26% over the past 6 months, but then came the recent drop that we've seen in Gap stocks. So this is another one where we're seeing some losses. But it's not all retailers are suffering the same fate. Rising costs mean that consumers have been looking for cheaper ways to shop for essentials. So watching out for Dollar Tree, Dollar General, these cost-cutting stores expected to win through when customers are so focused on getting value for money. Now, let's move on and take a look as well at what's happening in other areas of the market. So oil prices, little change this morning as we see a continuation on the pressures being brought to bear on the oil price because of what's going on with the lack of any long-term sustained demand. Let's look at what's happening first of all with Brent. As we see this chart pull back a little bit today. Yesterday we closed higher for a third day in a row. They were down at 78.05. Now, according to the EIA yesterday, crude stockpiles falling by 12.5 million barrels to 455.2 million. Analysts had anticipated an 800,000 barrel rise. US gasoline stocks dropping by 2.1 million barrels and distillates down by 600,000 barrels. This drop includes in oil stocks, reflecting the intense refining activity. Refiners are trying to keep up with higher fuel demand. Next Monday, Memorial Day holiday in the US traditionally marks the beginning of the peak summer driving season, and these refiners have moved away from heating fuel into the better refined products to drive vehicles. But of course, this time of year is becoming less and less important with the advent of electric vehicles. But nonetheless, it still forms a major backbone of this transition through the oil refiners, and it continues to be an interesting area of the market to follow. We just have a look at what's happening for copper. Yesterday, we were reporting a loss in copper. Now we've got a consolidation below the 8,000 level, currently trading at 79.42. Now, if we get a drop there, that we have this below this line of support, and we get a candle close below the 78.49, you're on the way down to some of these lows down here at 73.50, 73.35 for the price of copper. Much of this has been on the disappointment for the Chinese so-called recovery on from the release of the COVID restrictions. Many had thought that Q1 and Q2 would see some burgeoning demand. It hasn't come through in the Chinese economy. Lastly, a quick look at what's happening in one other area of the market. We've been reporting on this recently. New York orange juice, an all-time record high when we saw this market close at yesterday's session at $284.15, and we see a continuation of this recent run that we've seen. Record high, the price of orange juice. Just to reconfirm the breaking news we've seen in the last half hour that the German economy has gone into recession with that revision down with a contraction in the first quarter, adding to the first quarter decline that we saw on German growth, or lack of it, in the fourth quarter of last year. That is likely to be one of the big discussion points when the markets open at the top of the hour. That's it. We're back at 10:30 with Chart in the Markets. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.